All right, good morning, Checkmate crew. It is 30 minutes after the opening bell of the New York Stock Exchange at 10 a.m. Eastern Time on this Tuesday, January 17th, 2023. Yours truly, Mickey Blindside here with your market memo. Okay, so today is the first day back after 3-day Martin Luther King Jr. holiday. I hope everybody had a restful 3-day weekend. It looks like right now the market opened up mildly bullish, although I believe it did venture into the negative territory in the first 30 minutes. Now we're seeing a kind of bounce from there. We'll see if it continues and if it keeps going up. It is OpX week. Okay, it's options expiration on the monthly expiration for the S&P 500 and for most stocks and for most indices. It's always the third Friday of the month. That's when the monthly options expiration happens. And this expiration, I took a snapshot of this minutes before we went live here. And so we're seeing this huge zone right here on the S&P 500 options chain for this for the monthly expiration. So we have this huge zone here, and I think it may act as a magnet during that time. I think that 4,000, I think it's going to chop around that zone for maybe for a couple of days. I think it's very possible that happens. So, we'll see if we get a little bit of a pullback. If for some miraculous reason, if the market wants to be very generous, and if it sells off to, let's say, I don't know, 38.50 or so, I think that would be a very good buy the dip opportunity. I just don't see that happening. I mean, if anything, I think the bearish case scenario here for the week is that we just chop around here, okay? We're still under some major put walls. So if the VIX drops, all right, if the VIX drops, we could still keep drifting higher. That would be more of the bullish case for this week. But I think the bearish case for this week is that it chops around. It chops around that 4,000. It may go down to 39.50 or so, and then come back up to 40.50, and it just bounce around this and chop around that 4,000 open interest that we see. So that's just what I see for the week. For those of you who day trade, you may want to take a look at the options chain and just manage your risk accordingly. All right. Speaking of the VIX has been collapsing. I mean, look at this. It's just been collapsing. We're now in bottom in the teens now. We're under the 20s. The VIX is coming down after that announcement. The VIX 9-day also. We remember we had that announcement, the CPI, and after the CPI, it just dropped as well too. The VIX 9-day. So short-term hedging is also bleeding out. The VIX is also bleeding out. For those of you, I warned you guys, UVXY. This is not a market hedge you want to be in. It looks like as if VIX futures are up though today. So you're getting a 6-cent bounce, but you saw this decay like almost $2 in the past couple of weeks. So right now, contango is very high. I mean, if you look at the VIX term futures, I mean, the contango is almost 7-8%. Actually, there's no need to guess on this. We can actually go. There is a resource for this. VIX Central. They actually have a pretty good little visual here. So yeah, so contango is around 6%. So so that means every day as the contract rolls, part of the UVXY, whatever the VIX futures contracts that they hold, they have to roll a piece of that every day. So as they roll into a more expensive contract, as contango widens, it just creates more and more of a decay for UVXY. So that's why I keep telling you guys, this is not a good market hedge. You're better off buying puts on this after it spikes. Right now, premiums are low. We are under that 115 zone or whatever. So anything under 115, usually it's the IV is low enough where you could buy options on UVXY. Once it gets over 115, it's better to sell options on UVXY. This is the VIX of the VIX, okay? And also the VIX of the VIX also is going down. All year it's kind of been muted actually. So we'll see. And I think the VIX of the VIX coming down is partially because of the 5-day expiration in S&P 500. I think as there's more and more zero DTEs that market participants can use, they don't have to go out 2 or 3 days anymore. They can just do a zero DTE any day of the week now. And because of that, I think that's muting the effects of the VIX. I don't think the VIX, the spikes, it could mean the VIX it has a harder time spiking, but when it does, it can spike quite hard. And so that's why I think we're seeing the VVIX really suppress this, in the past year or so. This is just a theory for now, but as we get more and more data on the markets on what happens after the 5-day expirations on S&P 500 options chain, then I think I'll come out with some more conclusions that we can hang our hats on, and hopefully we can use in this market. Okay, but just an observation that I've seen so far, and so far it's just a theory. I still need a little bit more data just to prove everything, but that's just what I'm looking at right now. Some of you guys have mentioned this, that VVIX has been quite low all year, and it has been. I think it has something to do with that 5-day expiration on S&P 500 and some of the indices going forward. Okay. Speaking of which, going forward, so our dollar, let's take a look at the dollar. The dollar index has been not really going our way here. I anticipated that at least the dollar would retrace up just a little bit, but that is not happening. So if this continues this week, we may have to just get out of those UUP calls. They are being used as a hedge right now for my Quad U shares, but the Quad U has been going up. Most metal miners have been going up because of the dollar coming down. I'm still looking for an entry in SILJ and some of the other precious metals miners, SILJ, GDX. I'm waiting for an entry on some of these names. I'm just not getting one. All right, because the dollar just keeps going down and pushing precious metals up. Even Barrick Gold, I think, is a very good one to use, and whichever one gets closer to its a deep value level. Okay, I do want, if we're doing Barrick Gold, I know some of you guys would rather play individual gold names. If you guys are choosing Barrick Gold, that would be somewhere around 16 and a quarter or 16 and a half, on SILJ. If I were to be waiting for a good zone, it would probably be this $10 zone, or even if it gets a little bit under $10, that'd be great. GDX. GDX is a little bit further off. Yeah, GDX would have to come down to like 27 and a half or so. So we'll see. We'll see. All right. We may not even get an entry. Still, retail participation in gold is really low. Okay, retail is not in the gold trade right now. It looks like and again, when the trends reverse, we talked about this a few weeks ago. Retail, it's not that they tend to be wrong. Usually when it's with the trend, the crowd is actually right when it goes with the trend. Usually when the crowd is wrong is during a trend reversal. All right, so do we see a trend reversal here in gold, and are we going to see it start going on? It looks like it already has done that. I just want to see a deep enough pullback where I can just get in at a favorable price. It looks like gold and silver are down for the day. Okay. Most of the metals are actually down right now, even as the dollar is down. I don't know if that means, I don't know if the commodities market is front running currencies, or maybe it's just I don't know, some profit taking on the long side in the metals. Not really sure. But that is what is keeping my UUP, which are the dollar index longs. I am going to keep them for this week. Just, I was actually thinking about getting rid of them at the market open today, but as I saw silver and gold come down, I thought maybe we might see the dollar go up. So, if that's the case, I'll hold on to it just a little bit longer. It's not a position that I really like to be in at this moment with the dollar coming down, but hey, let's see what happens for the rest of the week. If by the end of this week, if it doesn't reverse and we don't see at least a green weekly candle, then in that case, I may have to exit the UUP calls. It was just a hedge for my quad U. We'll take a slight loss and we'll move on to the next trade. Okay. Speaking of the next trade, look at, let's take a look at crypto for a second. I know a lot of people have been excited about crypto, and how can you not be excited when it's been doing these huge moves? So right now, it looks like crypto recovered about, let's say about 25% or so on Bitcoin. Okay, so Bitcoin has gone up about 25% in the last few weeks, since the start of the year pretty much, and it looks like ETH did about the same, about 25% for year to date so far. So that's very interesting. It kind of just cut through our value level right here, or our uptrend line. It just kind of cut through it. Didn't really look back. I was really hoping, remember the trade setup was if we can get up here, make a higher high, and then back down and get to 1241.46, that would be a good area to get long. Well, excuse me. Well, it doesn't look like that's happening, okay? Unless it pulls back from here. Now, if it pulls back here and it gets to our uptrend line and it bounces from there, that would be interesting. I am not going to move up my buy level. I'm just going to keep it here, my initial buy at 1241.46, and I still have that long planned for this zone right here on the ETH gold line, but I'm not sure if that's going to happen now. I just don't know. I don't know if it's ever going to get there. I guess it could. I guess it could just bounce around here for a bit into the summertime. That is a possibility. I just don't know if it's going to happen. It might just keep running away from us, which, it is unfortunate, but it is what it is. We are seeing ETH and, most of the cryptocurrency space rallying. I think a lot of that has to do with some of our internal data, which I'm going to go over after this. But right now, I know some of you guys are in some of the Bitcoin miners with me. I know we're in HUT. HUT is, the last time we bought, it was around 85 cents. That was the last buy. And right now we're up more than double since then. So which is good. My cost basis is right around here. It's around 220 after that purchase at 85 cents. It's right under 220. As it goes up, I may start selling covered calls again. It just depends. If it just keeps going up, if I see volume just keep going up and up and up as we get higher and higher, then in that case, I may hold off on selling those covered calls. But if we get over into the, let's say, around the $6 mark here, $6 or $6.50, I may actually take profit on my shares. That would be like almost tripling from my cost basis. So, hey, 200% profit, I'll take it. Okay, I'll just take it and run at that point. I do think energy prices will come back, and I think miners are in for a very difficult year going forward, at least for this year and next year. But I do think in the meantime, though, we could see it pop. We could see a massive rally in this. And again, if we get to, it seems kind of ridiculous, but some of these miners, some of them are so shorted that we could see it pop up. And especially if Bitcoin or Ethereum, if they get to some of their old levels, like 30,000 on Bitcoin and Ethereum, and around if you can get to around 3,000, 2,000, 2,500 to 3,000 or so, we could see some of these miners go up in sympathy as well. It's not really that far-fetched to say you could get to $6.50 right now, even though it's at $1.82. But regardless, at $6 or between $6 and $6.50, if it gets there anytime in the next couple of months, I'm out. I'm just out. I'm gonna take my profits. I'm gonna run, and that's that. Okay, that's that. We'll see what happens, but that's what's my plan for the miners. Let's look at some of their internal data, and I think again, a lot of this money entering the market, I think it has a lot to do with some of our signals, and some of our signals are showing this. So, for example, if you look at our New York Stock Exchange high-low line, we are now above all of the moving averages. We have not had this for all of 2022. For all of 2022, this never happened, okay? Now, this is still not a buy signal for me yet, because I want to see it make a higher high and then have a pullback after that, okay? Already in our junk bonds advanced decline line, we are actually already seeing that higher high being made. It's already been made. And now I'm just waiting for a pullback on this one as well too. So if we can just rise just a little bit on the New York Stock Exchange high-low line, make that higher high, we get a pullback, it all becomes a higher low on both of them, on the junk bonds advanced decline line as well as the New York Stock Exchange high-low line. That would be a very compelling buy signal. Okay, I'm just waiting on that. With OPEX, with options expiration and everything, I mean, we could be just chopping around for a bit. So I don't want to be in something, get into a position, and then be unsure about it, in the next couple of days. So most likely we're probably going to see, if we see any type of pullback or anything, it may even be next week that happens. So, so again, patience is key here. I think it's worthwhile just to wait a little bit just to get a better signal. And again, we're starting to see improvements. Okay, we just need a pullback now. I think to and then that would be a very good opportunity to get long. And again, for me, I want to get long on either QQQ or IWM as long as we have that pullback and the internal data, like the New York Stock Exchange high-low line, the junk bonds ADL, they all are making higher lows on that pullback. That would be my buy signal, okay? So my plans still haven't changed regarding that, but I just wanted to point this out. This is now curling up. And usually when this curls up, that means rallies can last longer. We could have more formidable rallies. Rallies can last months now. So if this makes a higher high, even, I mean, that's a signal we haven't had since 2021. So that would be a pretty drastic change that the market is telling us about what's going on internally under the hood in the market. All right, and I just wanted to share that with you guys. Anything else you guys want to look at? Somebody said I was muted. Okay, I see. Let's see. We are having some questions here from our Discord. Thoughts on TA on VIX long term? Yeah, sir. Yeah, you already answered your own question. You said you can hear me calling you a fool. If you think TA works on VIX, VIX is, first of all, VIX, what is the VIX, right? Let's answer what is the VIX. The VIX is just an equation, okay? It tells you, all right, the VIX is derived from the options pricing for the next 30 days on the S&P 500, all right? So it takes all the near the money options for the next 30 days, okay, and it gives you an index on how expensive those options are, okay, and that's what the VIX tells you. All right, there is no, there's TA does not necessarily, it doesn't work on the VIX. All right, anybody who says that they could chart the VIX, if you draw enough random lines all across your screen, you're bound to hit some of them. That's not necessarily, that doesn't mean it works, okay? Just because you have some random lines that works on your chart, TA just doesn't work on the VIX, all right? The VIX, again, is just an equation of some of the options premiums on the S&P 500. It doesn't follow any like chart formations or things like that. Although I've seen some people who, I've seen some people who do some TA, and sometimes it works out for them. Generally, though, it has been proven that it doesn't really work. And even that person that I know who uses TA on the VIX, there are only certain conditions. Certain conditions have to be met, and it's super, super rare. He says that it works maybe once a year when certain conditions match. Okay, I know one person who does that, but and just from the way he describes those conditions, those conditions happen really, really infrequently. So, it hasn't happened. He told me it hasn't happened at all back in 2022. So I'm not really sure what he looks for in that. I'm not an expert on TA, but no, for the VIX, it doesn't really work. I do have, you might be asking why I have lines on my chart. Well, these lines, these horizontal lines are actually areas where I have noticed where the VIX can reverse. All right, it's just from just collecting data. These numbers just appear often, okay, as I did some back tests. That's all. These are just markers for me where I've seen back tests where certain reversals or certain pivots happen on the VIX. Okay, it just so happens to be that those zones are levels where we could see the VIX reverse or such. For me, I'll just use anything that works until it stops working. But again, broad TA, like, charting lines across your VIX chart generally doesn't work, okay? Why is that then? Okay, so I see people are still on this. Then why is there a consistent trend line for the bottom since 2019? A consistent trend line since 2019. I'm not seeing that trend line. If you can post one in the Discord, I'll take a look at it. But again, I think charting the VIX is a fool's game. You're gonna end up. Look at this. If you look at the VIX chart, okay, if you just look at the long-term VIX chart, what is one thing that you notice? When it spikes, it usually comes down, okay? So most professional traders that I do know that trade options, they, the most popular trading, I guess, strategy or methodology is shorting volatility after volatility spikes, okay? As you can see, VIX in the equation, if you know the VIX equation, which you can actually look up on the CBOE website or even on Wikipedia, it is a mean reverting equation, meaning that at some point the equation wants to go back. The VIX volatility tends to want to come back down and mean revert after a spike. Okay, and as you can see that, and you can see that all throughout history. After it spikes, it comes down. It never stays elevated. Okay, the VIX never stays elevated. Because the VIX, it goes up when there's unknown risks, and unknown risks become known with time. All right, and that is why the VIX ends up coming down after every spike. It's just the way it is. Volatility always mean reverts after a spike. All right. That's the premise for a lot of my trades. You know, when I sell puts on the S&P 500 index fund, or when we buy puts on UVXY. Those two are probably my biggest profit generators in any given year. All right. That's the easiest trade I know, shorting volatility after volatility spikes. What else? In our Discord, wait a minute. VIX gap up, but no drop on SPY. Signs of hedging as people continue to long shares. Yeah, you know, remember we had this thesis that we're going to see the VIX have these outsized spikes for very, very small dips on the S&P 500, and that is a sign that we're seeing some long-term hedging coming back. And yes, that's usually what happens right before a rolling bull market. And so we've been talking about this, and I think that rolling bull market, I think after OpX, we're going to see a stronger bid come through. Also, too, around end of February, early March. I think that's really when we're going to see the institutional demand come back, and we start seeing that sector rotation and that uncorrelated mini rolling bull market. Again, a rolling bull market is generally a very uncorrelated market, and you know we saw you know a lot of industrials catch a bid on around end of February 2022. We saw a lot of block purchases in those names. I think some of those names in industrial names, we might see them sell off after the 1 year mark, after after those gains are after those gains qualify for capital gains taxation rates rather than income tax rates. We're probably going to start seeing rotation out of some of those industrial names and into tech. And again, we had some tax selling in tech in December. So that 30-day wash sale rule time period ends around January 20th to the 24th. So from then until the end of February, you know, anytime between there, I think we start seeing some tech buying happening again. And again, that was part of our thesis from the end of the year 2022. I still think that happens again, but it does take some weeks to manifest itself. It will take some time, okay? Again, from our Discord, mini NFT bull run front ran the crypto, and most crypto took the CPI. I'm not that knowledgeable on the NFT market. Although I am seeing on social media that people are saying that NFT volumes are up, so that may be the case. Maybe risk taking is coming back into the market. And again, you know, junk bonds, that junk bonds ADL line really, I think, the junk bonds ADL line actually front ran all of that. Remember, our junk bonds ADL line started curving up, you know, around October 26th. We had a new 4 days in a row of advances over declines, and we saw the market really started, you know, respecting floors and put walls more as we saw the junk bonds ADL line go up. We did see it come back down, you know, a little bit and make that higher low back in December, but then end of December and until now, we've just been seeing advances over declines again. So there is some risk on sentiment right now, even in the bond market, and even in the junkiest part of the bond market, we are seeing some risk taking happening. So it's only right. I mean, if we're seeing, you know, the risk appetite increase even in the bonds market, you know, that trickles down into all aspects and all risk assets. So I'm sure even in NFTs, you probably saw something like that too. Anything else you guys want to look at? Going once, going twice. Any real estate news? No, I don't have any real estate news, although I am looking at some data that's coming out. It should be coming out soon. I think in the next couple of days, we should be getting some credit data from the Fed. And if it does come out either tomorrow or Thursday, I will report on that. But I am looking at the Fed's website for those credit delinquencies and mortgage delinquencies. I want to see what the last quarter brought us. And I will, when I find out, I'll let you guys know. Okay? I'll let you guys know when I see that. Speaking of which, tomorrow, all right, I do have a business meeting tomorrow. I already posted this on our Discord, but I will not be available at our usual time. I may have to either push it up a little bit earlier, or I might have to do it at the end of the day. I am not sure yet. My schedule tomorrow is kind of uncertain. And so tomorrow I will let you guys know. We may even have to skip it altogether for tomorrow. I'm not sure. I will try my best to do another video tomorrow, but as far as what time will it be, I am not sure. So I just wanted to let you guys know that, okay, just for tomorrow. Thursday, we'll go back to our usual time, okay? All right, well, in that case, that wraps up our session of the Morning Market Memo. Our Discord invitation link is in the video description below. Come join our Discord. Be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, as I said, tomorrow, I'm not sure when I'm going to be on or if I'm going to be on, but on Thursday, I'll be back, normal time, 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern time. I will see you then. Again, on our Discord, I'll post tomorrow's schedule, and then we'll go from there. Have a wonderful day, guys. Trade safe.